In this video, I want to analyze the latest earnings of TPL, Texas Pacific Land. That's the Q4 2024 earnings report that was released today. So maybe from your point of view, it will be yesterday. But so far, the market see no reaction. The stock is barely up 1%, no major move. The TLDR of this earnings report, I just skimmed through it, is not a lot of growth. The business is profitable, the business is fine, they generate some strong free cash flow, but almost no growth. We are talking about a growth of 10%. So in this video, we will take a look at this document. We will maybe compare it to the page on Guru Focus and the past to compare the growth rate. And we will also listen to the earnings call because you know it. I own Landbridge, so I own some shares in a company that owns lands in Texas. And there is this theory of data centers being built in Texas that will fuel the AI race. So if you build a lot of data centers in Texas, it will bring an additional revenue stream for TPL and for Landbridge. So maybe last quarter, TPL was asked about the data centers, and that's definitely in the pipeline. So I did not check the earnings call for the moment, so I don't know if they will mention it. I hope so. So this is basically the plan for this video. In case this is your first video from this YouTube channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And my goal with this channel is to document the journey and help as many investors as possible. So okay, let me get straight to the report. Q4 2024. What do we have? This is the numbers, and they don't compare with the numbers of last year. They just talk about the net income. What I want to check is the comparison with last year. What is that? That's the water record performance for water services, which is great. For TPL, in case you don't know, you have the oil and gas segment and water segment. And water segment, they have lower margins, but it's growing fast. It's growing 20% per year. And since 2023, the water segment is the segment that drove the growth for TPL because the oil and gas segment did not move much. Developed an energy-efficient method of produced water desalination and treatment. The company successfully conducted a technology pilot and has begun construction of a subscale produced water test facility with an initial capacity of 10,000 barrels of produced water per day. Good. Yeah, they plan to do more things related to water. 2 small acquisitions, tiny acquisitions, 10,000 acres. Yeah, this is not recent. This is not news. The Q4 2024 represented a strong finish to the year. We delivered record oil and gas royalty production. Or maybe what I want to check is maybe you have more production than the price, but the price of oil was stable or declining. So this is the reason why the oil and gas segment did not move much. And also record produced water royalty volumes. For the full year 2024, TPL set annual records across nearly every major performance metric, including oil and gas royalty sales. We deployed $400 million towards accretive, high-quality royalty interest and surface assets. Okay, let me continue. Beyond our legacy business, we are keenly pursuing various next-gen growth prospects and continue to advance commercial discussions across numerous opportunities. The opportunities for the land management are renewables, solar panels or something like this, something ESG. You also have more water development. You also have data centers. This is basically how you can use the land in Texas. In addition, construction has begun on our subscale produced water desalination. Okay. That will be finished in 2025. Furthermore, there remains a compelling opportunity to consolidate an enormous yet fragmented market for oil and gas royalties. Okay, business as usual. This sentence is big. We expect more next-gen growth prospects. This is good. I hope they will talk about it in the earnings call. No, I want to check the table right away. Here we go. This is the production full year at the right of the document here. So you see the production of oil went from 3.7 billion to 4, small increase here, and the realized price of oil, the barrel of oil, did not move much. Yeah, this is what I thought, because the oil price didn't move a lot. This is just a volume production thing. About natural gas, you see some strong improvement here, and this one is insignificant. Okay, all royalties are here, natural gas royalty and NGL. Okay, not a lot of growth for the oil and gas royalties, to be honest. Actually, I don't think the production improved massively when it comes to oil. I think most of the revenue came from natural gas and water. Yeah, that's interesting. If you check the revenue, this is the statement of income statement. You have the oil and gas royalties improving a little bit. I mean, what's the growth rate for oil and gas royalty? You have, let me check, 373 divided by 357. 4% growth rate for oil and gas. That's not that good. Not that good. And water sales are growing. Let me check this line. Water sales growing 33%. Life is good. That's a different growth rate. The margins are different. You can check this. The margins are different, but the growth rate is definitely in the water business. On a year-over-year period for the comparison Q4 2023, Q4 2024. Oh no, that's this one. Q4 2024 compared to Q3 2024, you see no improvement in water sales. Okay. Water royalties improved a little bit. Same thing for the produced water royalties. What is the growth rate for this segment? Growth rate of 23%. So all the growth for TPL comes from water. And my guess is if this continues, maybe the margins for TPL will decrease a little bit. Okay, that drives higher operating income, business as usual. What is the growth rate for operating income? It's 10%. Okay. And okay, income tax expense. Yeah, no big change here. The net income has grown 53. The net income has grown 12%. Not a lot of growth for the net income. And did they do buybacks? They did almost no buybacks. So the earnings per share is increasing by 12%, I guess. Let me check this one. Yeah, growth rate of 12.1% for the EPS, earnings per share. Just for the sake of the comparison, Landbridge is growing by much more. The growth rate of Landbridge is more than 30%, more than 40%. For full disclosure, TPL, I think that's my favorite business of the world. The business model is amazing. I owned the stock between late 2020 and late 2024 for 4 years. So I sold the stock around here at $1,600. But I will follow the company, because I want to buy back the stock. I want this stock to be part of my portfolio. So in the meantime, I own Landbridge, which is cheaper than this one. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Okay, so no buyback, and basically earnings are growing by 10%. If I check what is operating results, no. Do you have something with your free cash flow? Cash flow statement, I mean. No. Yeah, okay, on a quarterly basis, they don't share it. Okay, very well. Revenue, no. Let me just double check, triple check, and that's basically it. Okay, I don't think the balance sheet has changed much. If I check on FinChat, what is the latest change? This is your operating revenue. Revenue going up 12%, as you can see here. Gross profit margins are extremely high. This is a royalty business, so it's normal. You don't have COGS at all. Operating margins are insanely high as usual, and net income is growing a little bit. Okay, let me check. This is net income of 112. Can I check here? Net income of 112 and 18. Sorry, this is the good slide. So the FinChat is updated. FinChat is quick. What about the cash and cash equivalent? Cash has been declining. Look at this. The cash balance has been depleting a little bit. Why is that so? What did you do with your cash? Did you invest? Account receivables here. What is changing here? Nothing. Long-term investments. They have added this long-term investments. What is that? Something I want to check. Other intangibles, account payables, no current liabilities. The company has no debt. That's perfect. What about the cash flow statement? What happened in the cash flow statement? That's your net income. You start from here. D&A, you reduce SBC, you add it back. SBC is a small part of the cash flow statement, so that's fine. Change in unearned revenues, no. Change in income taxes, seems like this is positive. No capex. Sale purchases of intangible assets, or maybe that's the small acquisitions they did. Okay. At the beginning of the document, they mention 2 acquisitions, right? Acquisitions for $400 million, and now you see it was in August and October 2024, and they also acquired a new lot of lands for $50 million in 2024. I'm guessing this is this one. Purchases of intangible assets. They are purchasing a little bit more lands. And they didn't do much buyback this quarter. They gave a dividend. That's a large dividend. Common dividend paid of $200 million. Why is the dividend so large for this quarter? Am I missing something? Look at this. So some of the cash has been used to do an acquisition and to fuel buyback dividend. Okay, you have a special dividend of $10 per share and a $5 per share dividend. Okay, that means you have paid $400 million of dividends. Okay, perfect. No, I understand now. Most of it is the special dividend plus dividend. Okay, perfect. 400. Let me check. I think we'll go to the call right away. I'm not excited by this quarter. If you want my opinion, I'm not excited at all by this quarter. The company is cash heavy. They have a lot of cash. They don't know what to do with the cash. So they just gave a huge dividend, and they plan to do small bolt-on acquisitions to have more minerals revenue. But the growth is not here. Frankly, all the growth is in water segment. So maybe they will talk about it in the call. Maybe they will talk about data center projects that will maybe fuel revenue in the future. But as long as the price of oil stays the same like this, look at the price of oil, not changing at all, it will all rely on production, and the production is growing at 4% per year. So maybe the estimates are not pricing this in. The PE ratio for TPL right now, let me check. The PE ratio for TPL is above 50. So this is not pricing in a slowdown in this one. Natural gas, you have the price of natural gas that has decreased over time. If the price of natural gas is going back to $2, this will increase massively. Good. And okay, no change over here. Okay. And water, you don't have a lot of elements to understand their water segment. Water sales are here. Let me check. Year end, water sales improved Produced water royalties improved drastically. Water and service operation. Yeah, you don't have a lot of information about their water segment. I used to go through the reports in great details, but did not have a lot of information. Okay. I think that's fine. I think the business is still fine. Business as usual. It's just that the stock is clearly overvalued. The stock is... I mean, that's not cheap at all. You have a PE ratio of 50, 60 for a business that is growing 12%. So literally, you have a big change here. The free cash flow for the business is obviously being stable, growing 10% per year. I don't expect anything. Look at this. Look at this in Guru Focus. On a quarterly basis, the net income has not moved a lot. The free cash flow has not moved a lot. They are paying a dividend, an extremely high dividend. I don't want the business to do buyback actually. At such a high valuation, I think buybacks will completely destroy value. So strangely enough, I think management is smart to avoid buybacks. Strangely enough, I think management is doing a great, that's a good decision to pay everything to dividends. Because, I mean, now they have reached, they have what, $500 million of cash in the balance sheet. They have different options. Either you can use some of the cash to do an acquisition of small lands. This is also what they do. You can do a massive merger, massive acquisition of another company. Like you have rumors of them buying Landbridge. I don't think this will happen. I mean, this is not very... I don't think this will work out. You can pay dividends, you can do buybacks, or you can keep your cash in the balance sheet to invest in a 5% bond that will yield a 5%. Yeah, I mean, if you have $500 million, 5% is not a lot. It won't move the needle for such a high net income. So they don't have a lot of choice, actually. If you are the CEO of TPL right now, what do you do with the cash? You do bolt-on acquisitions, you do partnerships for potential data centers, and you give plenty of dividends to shareholders. This is exactly what they are doing, so congrats to the management. Usually, I mean, the management for TPL has not been great, right? It's been a trust, sorry. It was a trust before, and they changed to become a C Corp company in 2021, and there was a lot of there were a lot of complaints. They went to court against their shareholders, including Horizon Kinetics, in 2023, and that caused a lot of drama. At the time, in 2023, here, in the SG&A cost, the biggest cost that TPL had was the lawyers' administrative costs for a trial, a court against their own shareholders. They wanted to pass a strange bill, a strange rule to shareholders, to dilute all the shareholders. Yeah. Now the price is high, right? You have a PE ratio that is extremely high. Maybe it's good to dilute shareholders a little bit to finance an acquisition. I will disapprove this fiercely, but that could be interesting in some extreme situations. So I'm very happy that they don't do that. They don't dilute shareholders. They just give plenty of dividends. That's fine. That's fine. Okay, you know what? Let me listen to the call. Take a glass of water. Take a cup of tea, coffee. How long is the call? 25 minutes? Oh, that's a short call. I changed my mic, so normally you should be able to hear my computer well. Well, for the moment, this report is good, but not that good. So I don't think it justifies a PE ratio of 50, 60 for the business. And for that reason, I will not buy the stock. I want the stock to go down massively so I can buy more. If the stock drops to 1,800, that would be very interesting. But so far, frankly, this is a business growing 10% per year. So it is not, the premium is not justified. Okay.
Greetings and welcome to the Texas Pacific Land Corporation fourth quarter 2024 earnings call. At this time, all participants are in a listen-only mode. A brief question and answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press *0 on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce your host, Sean Amini with Investor Relations. Thank you. You may begin. Hi, operators.
website at we do not undertake any obligation to update our forward-looking statements in light of new information or future events. We will also be discussing certain non-GAAP financial measures. More information and reconciliations about these non-GAAP financial measures are contained in our earnings release and SEC filings. Please also note we may at times refer to our company by its stock ticker TPL. This morning's conference call is hosted by TPL's Chief Executive Officer, Ty Glover, and TPL's Chief Financial Officer, Christophe. Management will make some prepared comments, after which we will open the call for questions. Now I'll turn the call over to Ty.
Good morning, everyone, and thank you for joining us today. Fourth quarter closed a remarkable year as TPL set records across nearly every key operating driver despite sideways crude oil and natural gas prices.
I hope you hear well and that's high enough for the volume. I will do my best. If that's not good, I will work on it for the next video.
Year over year, 2024 oil and gas royalty production volumes increased 14%, water sales volumes increased 31%, and produced water royalty volumes increased 37%, with all three of those performance indicators representing corporate records. Our strategic investments into people, technology, and infrastructure are paying major dividends as our surface and water revenues were collectively up 23% year over year. In addition, last year we acquired over $400 million of high-quality Permian mineral royalty, water, and surface assets, providing TPL with additional growth lever. The cumulative impact of all these successes culminated in record shareholder return of capital in 2024, with a combined $376 million returned via dividends and buybacks. It was very simply a great year. I'd like to focus my prepared comments today on three topics. First, a debrief on the Permian during 2024 and an outlook for this year. Second, a description of our latest efforts towards next generation opportunities. And lastly, an update on our produced water desalination and beneficial reuse endeavors. Starting with the Permian. Despite a steady decline in rigs throughout 2024, Permian oil and gas production exited last year at record highs. According to Baker Hughes, Permian horizontal rigs peaked at around 345 in the first half of 2023, which then declined to about 300 entering 2024 and exited the year around 290. However, as the industry has demonstrated time and again, operators continue to find efficiencies through innovations such as longer laterals and multi-formation pole development.
Yep, I made a video a couple of days ago called, the complete thesis about land bridge I showed you the letter from Horizon Kinetics saying that time and time again, you have more efficiency when you drill oil. You have the fracking stuff. You can get more and more complex to be more efficient when you drill oil, and that creates new revenue stream. So even if the production is decreasing, the efficiency is going up. And because the efficiency is going up for all producers, they make more money. And because they make more money, TPL is getting a royalty of the money, so TPL is getting more profitable. You don't bet against innovation.
Based on preliminary industry data, on a full-year basis, despite the average rig count in the Permian being down about 8% from 2023, the number of spudded wells was down only 2%. Furthermore, well laterals were approximately 5% longer year over year, which translated into 2024 having approximately 3% more drilled lateral feet compared to 2023. The net of all this, Permian production still managed to grow approximately mid-single-digit percentage exit to exit from fourth quarter 2023 to fourth quarter 2024. Looking ahead to 2025, we see a constructive outlook for the Permian. Fourth quarter 2024 new permits basin-wide were up approximately 20% year over year on a simple count basis and up 24% year over year on a total lateral feet basis. The Matterhorn pipeline coming into service has helped to ease the bottleneck on natural gas takeaway, which should help reduce basin differentials and improve price realizations. This is especially meaningful for the Delaware Basin, where gas and NGLs production splits in certain subregions can, in aggregate, represent over 60% of a well's energy content. We still see a healthy inventory basin-wide of drilled but uncompleted wells, otherwise known as DUCs, where we estimate current DUC counts of less than 2 years of age to be roughly equivalent with levels from 2023 and 2022. Current Permian rig counts should be able to generate growth assuming new spuds are turned to sales on normal development cadence and not used to build excess DUC inventory. Of course, Permian development and production will still be heavily influenced by the price of oil, and the ultimate path of crude oil prices over the course of 2025 will likely dictate whether activity accelerates or slows down.
Yeah, business as usual.
Next, I'd like to discuss TPL's efforts beyond our legacy oil and gas business. Over the last few quarters, we've seen a robust increase in interest towards the development of data centers, power generation, and grid infrastructure. As we've discussed in the past, the Permian's vast hydrocarbon and non-hydrocarbon resources make it an attractive option for developing energy-intensive assets. Our years-long efforts to attract substations, renewable projects, battery storage, and other infrastructure combined with our leading source water network, our emerging produced water desalination technology, and our sizable oil and gas royalty position has positioned TPL to take advantage of emerging opportunities. We believe that just owning the land itself is not sufficient to create durable incremental value. Rather, by also bringing other major elements such as high-spec freshwater, access to grid infrastructure, and availability of hydrocarbon and renewable energy, we can participate in the value chain as these next-gen industries emerge and capture commensurate value as they grow and mature. Our approach to these new opportunities is not unlike our approach to the Delaware Basin water business nearly a decade ago. Back then at TPL, we saw...
Yeah, they started their water segment in 2016, 2017, and it has grown at least 20% per year since. So this is what they are talking about.
A budding business opportunity with an uncertain competitive landscape and fragmentation among developers and operators. We ultimately executed on a strategy to exploit TPL's latent advantages. We moved away from the liquidation model that the trust had employed for over a century and instead proactively hired experienced personnel and invested growth capital. We're just as willing today to commit resources to these potential new opportunities, especially in domains where TPL has a competitive advantage. We continue to make progress on this front, and we will share more as we reach certain milestones. Turning to our produced water desalination and beneficial reuse endeavors, we have begun construction of our 10,000 barrel per day test facility, which we refer to as Phase 2B. Equipment is currently being assembled at our manufacturing partner's facility, which is located in the U.S. The desalination equipment will be commissioned and tested there, and once it satisfies specifications, it will be sent to Orla, Texas for final installation. We still expect completion of this facility in the middle of this year. We expect the total cost of Phase 2B to be approximately $25 million, having spent approximately $7 million in 2024, with the remaining balance to be spent this year. We also have an option for a behind-the-grid gas-to-electric generation that would be tied into a nearby pipeline, which would require additional capital investment of approximately $10 million. In addition, our engineers are studying various cost and efficiency opportunities as our freeze desalination process provides potential synergies if co-located with other industrial or power generation facilities. In advance of the completion of our Phase 2B desalination facility that will produce both fresh water and a concentrated brine solution, we are advancing with multiple beneficial reuse initiatives. We expect to receive our second land application permit for the Texas Railroad Commission for an approximate 100-acre plot in Orla, Texas, where we plan to undertake a restoration project to restore native brush grasses, reintroduce quail to the area that will be irrigated with fresh water produced from our desalination system.
Yeah, business as usual. The water business is getting more complex, new revenue streams, nothing frankly big here.
This plot itself would be able to accommodate the entire freshwater output from our Phase 2B desalination facility. Additionally, early last year, we submitted an application to the Texas Commission on Environmental Quality, otherwise known by its acronym TCEQ, to discharge treated desalinated produced water into the upper region of the Pecos River. That technical review is progressing. We have been responsive to questions and requests from regulators. We hope to have that permit this year. We are also looking to leverage the ability to source substantial quantities of highly purified desalinated freshwater or ice that might be a critical resource for various industrial uses. Finally, I want to thank all the employees here at TPL. Not many energy companies can claim that fiscal year 2024 was their best year ever, but for TPL it was. And that is owed to the dedication, collegiality, and talent of our employees.
Yeah, I mean, that's kind of true. I mean, this is not a really energy company, right? It is a land management company. It turns out that you have some oil. But also, today was Cenovus Energy reported earnings. The earnings are terrible. You had the Occidental Petroleum that reported earnings, I think, yesterday. The earnings were okay, nothing significant. You have a lot of oil majors that are struggling because of oil prices going nowhere. And if you check the stock for CVE, it's priced in. For Cenovus Energy, yeah, they are dropping 4% today. The stock has gone nowhere for years for some reason. The EPS is not improving. At the end of the day, stock prices follow earnings per share. So we will see. So yeah, I disagree that it's an oil and gas company. Now it's becoming an oil and gas and a water play.
With that, I will hand the call over to Chris.
Thanks, Ty. For full year 2024, we generated record free cash flow of approximately $461 million, which represents an 11% year-over-year increase. Full year performance benefited from higher daily oil and gas royalty production, which increased 14% year-over-year, higher water sales daily volumes, which increased 31%, and higher produced water royalty daily volumes, which increased 37%. Of the approximately 26,800 barrels of oil equivalent per day for full year 2024 royalty production, acquisitions that closed last August and October contributed approximately 1,100 barrels of oil equivalent per day. Consolidated results were partially offset by lower realized oil and natural gas prices, which declined year over year by 2% and 48% respectively.
Well, if I take the other side of the coin, if in 2025 the volume, the production continues to increase at 11-12%, and if for some reason inflation picks up and you have oil prices going up by 10%, 12%, you can have some good growth. Like they can easily reach 20% growth in earnings per share, TPL. So base case scenario, they grow 10-15%. Bull case scenario, they grow even more. So when I say the stock is overvalued, I don't think the stock, the good PE ratio is not 20. It's a little bit more because the company is in a very good situation right now.
Consolidated revenues during the fourth quarter of 2024 were approximately $186 million. Consolidated adjusted EBITDA was $161 million, and adjusted EBITDA margin was 87%. Diluted earnings per share was $5.14. Fourth quarter 2024 royalty production of approximately 29,100 barrels of oil equivalent per day represents an 11% increase compared to the same period last year and a 3% increase sequentially as activity remains robust in our Loving County, Central Midland Basin, and Northern Reeves County subregions. Quarterly produced water royalty volumes grew 8% sequentially and 44% year over year to approximately 4 million barrels per day, benefiting from our new volumes into our out-of-basin pore space in Andrews County that we acquired in 2023.
That's great.
Source water sales volumes of 737,000 barrels per day grew 2% sequentially and 42% year over year, with demand for treated water especially strong during the quarter. As of quarter end, we had 6.4 net permitted wells, 13.2 net DUCs, and 3.0 net completed but not producing wells. That amounts to 22.6 net line-of-sight inventory.
Well, yeah, when they say sequentially, it's quarter over quarter, right? And when they say annually, they compare it with the quarter of last year. They don't compare the full year return versus the full year return. It's either a year-on-year comparison or a quarter-over-quarter comparison.
We believe this level of near-term inventory can support near and medium-term production growth above overall Permian production growth. Permit and spud activity have been especially strong in our Culberson County royalty acreage. The top 6 companies operating on our DUCs are currently Chevron, Coterra, Exxon, Oxy, BP, and EOG, which in aggregate represent approximately 71% of TPL's total DUCs. With regard to capital allocation, in 2024, we deployed a record amount of capital towards highly accretive M&A while simultaneously investing in our water business and returning a record amount of cash back to shareholders through dividends and buybacks.
Mostly dividends.
Looking ahead to this year, because of our high-margin business model, fortress balance sheet, massive Permian royalty and surface acreage footprint, talented commercial team, and innovative engineers and scientists, we have both the financial wherewithal and opportunity to invest across numerous avenues toward generating long-term value while also returning substantial cash back to shareholders. Yesterday, we announced a regular dividend of $1.60 per share, which represents a 37% year-over-year increase. We expect capital expenditures in fiscal year 2025 to be approximately $65 to $75 million. This includes approximately $28 million for our produced water desalination and co-located gas generation.
Okay, wait. They expect the capex to be $70 million. What has been the capex over the last few years? It was much lower than this. On an annual basis, cash flow statement, let me go to the capex here. Look at the chart. Here we go. So when they ramped up their operations in water, you have more capex here. The maximum capex the company had was $50 million. And now they plan to make it $70 million. Yeah, okay. In 2024, it was $30 million. They plan to double the capex. Very well. And if you look at the quarterly basis, let me just confirm what I see. Capex, this. Yeah, this is roughly $30 million. Capex is ramping up. You can expect more capex. And if you can expect more capex in the future, maybe you can expect a decline in free cash flow. Now the capex is $10 million. Let me compare it with the cash flow. Cash flow of 100. Maybe the free cash flow will be stable even if you have more production, more volume, etc., more sales, more net income, maybe the free cash flow will stay stable for 2025 because of massive capex for their operations. Yeah, I mean, that's fine. That's not a red flag at all. That's just the way the business operates.
Balance of CapEx for the year is primarily for our brackish source and treated water business. CapEx toward the higher end of the range would be predicated on growth opportunities should upstream activity ramp in and around our footprint. With respect to M&A, we still see ample opportunity to consolidate Permian minerals, royalties, water, and surface assets. Our focus remains on assets that are at least as good or better quality than our legacy asset base, and any acquisition would be intentioned on enhancing and maximizing intrinsic value per share. Acquisitions over the last couple of years serve as a good example of what this M&A growth lever can provide shareholders. The minerals and royalties we purchased last year are contributing a double-digit percentage uplift to production, while also substantially augmenting our near-term and long-term well inventory. Acreage and pore space acquisitions in Andrews and Winkler County are already driving significant produced water volume growth, and these assets are especially critical towards providing the industry with out-of-basin disposal options. Recall last year we announced a target cash and cash equivalents balance of approximately $700 million, where above this level, TPL will seek to deploy the majority of its free cash flow towards share repurchases and dividends. Our balance sheet still has zero debt, and our current cash and cash equivalents balance at year-end was approximately $370 million. Though I would add, nothing precludes us from accelerating shareholder return of capital, even if we're under that $700 million level. In summary, we'll continue to be thoughtful and opportunistic with our capital allocation as we remain focused on maximizing shareholder value. The legacy business is performing incredibly well. We have a multitude of exciting growth opportunities in front of us, and we have the team, business strength, and balance sheet to execute. And with that, operator, we will now take questions.
Thank you. We will now conduct a question and answer session. If you'd like to ask a question, please press star 1 on your telephone keypad.
Yeah, no big news actually. No big news. They say that they did some acquisitions in the past and it was accretive to the revenue, obviously. I mean, they bought a little bit more lands, so that will bring more revenue. And they clearly are ramping up on the dividend program. I don't think they gave a lot of money to do buybacks. Let me check the repurchase of common stock. Almost, 6 million per quarter. We are talking about less than $40 million in buyback. And on an annual basis, if I look at the buyback program, 30 or $40 million in buyback annually. And now compare this with the dividend. Boom, nothing. This is very different. They focus on dividends right now, which is good because the stock price is high. The valuation is high. This is quite good, quite smart management. About the ratio, what's the dividend yield, by the way, on TPL right now? Dividend yield 0.5%. That's not a lot. It's a tiny dividend. Let's not kid ourselves. A dividend, let me check on Stock Unlock. By the way, I'm using FinCheck and Stock Unlock. You have links in my description if you want discounts. These are great websites. The dividend yield of the company has never been really high. The maximum was 2% when the oil price was negative in 2020. But the dividend yield for this company has always been below 1. So I know that they mention some special dividends, but I don't see a lot of dividend growth. 1% is not a lot.
A confirmation tone will indicate your line is in a question queue. You may press star 2 if you'd like to remove yourself from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. Once again, that's star 1 at this time. One moment while we poll for our first question. Our first question comes from Derek Whitfield with Texas Capital. Please proceed.
Good morning, Ty and Chris, and congrats on your progress during 2024.
Thanks, Eric. Good morning.
Also, certainly thanks for the update on water and for the next-gen opportunities you guys are discussing. Maybe starting there and referencing page 33 of your presentation, could you further elaborate on the potential desal synergies with behind-the-meter power generation and data centers and how advanced your discussions are on this opportunity?
Oh, first question about data centers. Wait, TPL earnings report. On FinChat, I don't have the earnings presentation. You see here, you have transcript, report, and you don't have presentation. In a couple of days, it will be available. So maybe I can go directly to their website. No. Investor presentations. Yes. Perfect. So here is the investor presentation. You have some charts in case you want to continue to do the analysis. Let me skim a little bit to page 33 and you will understand. No. Land resource management, water service. I told you guys, the water business is growing massively. No. Oh, that's some good charts. Yeah, as usual. Zero debt, capital allocation framework. Look at this. Dividends. Sorry, I'm just leaving the call for a few minutes because I discovered the investor presentation. I thought I didn't have access. Look at this. Most of the capital returning to shareholders is through dividends. Like since 2019, it's been the case. Before 2019, the stock was a little bit cheaper. You had a PE ratio of 20-25. So they did massive buybacks. But now we reached a valuation level where they are not comfortable doing buybacks. Okay, too bad. Invest capital. No, let me scroll down. Free cash flow is going up. Do you have capex? No. Margin comparison. Where can I put my face? Here. No. Horizontal. Page 33. This is okay. Producing horizontal wells. Inventory. Producing wells. More inventory. I don't have the capex. I would love to see water sales volume. I mean, that's the water segment of TPL is just immense. Look at this. This is just up and to the right. People that say it will stop don't see this kind of growth. This is just phenomenal. The water segment. Permian produced water is just going up and to the right. This is very bullish for Landbridge, Waterbridge. Delaware. Page 33. Here we go. Innovation. TPL innovation, produce water desalination. Okay, they talk about this. Okay, very well. What's the question here?
Do not undertake any obligation to update our forward-looking statements in light of new information or future events. For more detailed discussion,
certainly thanks for the update on water and for the. I think when you look at all the ingredients, maybe starting there and referencing page 33 of your presentation, could you further elaborate on the potential desal synergies with behind-the-meter power generation and data centers and how advanced your discussions are on this opportunity?
Yeah, sure. Robert, you want to take that one?
Sure. I think when you look at all the ingredients that are required for a data center, and the growth of data centers, not just in the Permian but across Texas, power constraints are being felt everywhere. When you say that, and when you look at the synergies and the ingredients that it takes and what the Permian has, it truly is a transformational opportunity to do it. The behind the grid generation, to see data centers come to West Texas, it's going to take behind the grid generation. And then when you look at the synergies of waste heat capture off of that generation for use in desal, it's pretty tremendous. And then also just the water component. The water component of, they look at the synergies of, we've got too much water in the Permian in form of produced water, and then the demand that these data centers need, and tying all three of those together is truly a tremendous opportunity.
Great, and that makes complete sense. And then maybe staying with you, Robert, just on the desal opportunities, is the goal still 75% volume reclamation, 75% analyte removal at a cost of 75%? And I guess further, now with the benefit of another year of assessment and your progress with phase 2, how confident are you guys in achieving that 75 cent per barrel treatment cost with a commercial scale facility?
With all treatment, scale takes to get to that point. I'll take it kind of 70, each 75 as you go. We're on track on the first two. The 75% volume reduction with 75%. We're trending toward that. And again, mentioned in the call is, the testing we're doing right now in North Carolina. When you look at the 75% cost, outside of just scale to get there, and we see that scale and that economy of scale is required even in our traditional treatment used for hydraulic fracturing. The bulk of that 75 cents for any desal technology comes from the energy consumption that's required. And you try to base that at first in a kilowatt per hour, assuming that you're going to tie into line power. And again, it goes even more toward the benefits of going to the nat gas generation. Being able to get that kilowatt per hour cost down via gas and infield gas feed and the generation feed, the 75% is 100% achievable. but we're trending toward all three.
That's great. And perhaps for Ty or Chris, I mean, in the press release, you guys mentioned a compelling opportunity to consolidate enormous yet fragmented. And perhaps for Ty or Chris, I mean, in the press release, you guys mentioned a compelling opportunity to consolidate enormous yet fragmented market for oil and gas royalties, surface and water assets. Where are you seeing the greatest opportunity today between royalties and surface?
Yeah, I mean, honestly, the deal pipeline looks really good. The landscape for 25 looks very good. And we've been looking at, quite a few opportunities both on the surface and mineral side. So, it seems like there are more opportunities for both, on the landscape for 25 than we've seen in the past. And I think we're, going to get the chance to look at a lot of really high quality opportunities. And there seem to be some larger, higher quality packages starting to come available. So, we are very excited about the landscape as far as acquisitions and, across surface, mineral, and the water space as well.
Terrific. And perhaps thinking about things from a macro perspective with the recent change in administration, could the Trump administration make any federal changes in policy which could open up greater amounts of pore space in New Mexico that would be attractive to industry given the depths of SWD wells in New Mexico in general?
Maybe repeat the last half of that question, Derek. Sorry.
Sure. So could the Trump administration make any changes in federal policy which could open up greater amounts of pore space in New Mexico and federal lands that would be attractive to industry given the depths of SWD wells in New Mexico in general?
I mean, I guess it's possible. I'm not aware of anything coming down the pipeline that is going to help New Mexico from a regulatory standpoint as far as disposals. Robert, I don't know if you are. Do you have anything there?
I don't, and that would be, again, not aware of anything. That would be a piece we haven't seen to date. But I would say, even beyond any regulatory changes, just the need for an alternative in water, that's outside of disposal, is going to come just from a functional standpoint, even beyond a regulatory standpoint. But I'm not aware of anything.
I think those changes would likely be more state level than fed level.
And correct me if I'm wrong, but I think the wells, generally speaking, on the Mexico side, aside from the regulatory link maybe that would require, or more link that would require from a timing process, those are about 50% more expensive in general, as I understand. Is that in the right zip code?
I assume you're referring to the deeper disposal.
That's correct.
The deeper disposal is, I would say, even greater than 50%. But you've seen a pullback in New Mexico.
Was that a Q&A session or just a discussion between friends? I mean, how many analysts are waiting in the call? This guy has so many questions and they are taking their time to answer. Maybe there were a few analysts on the call, and this is the reason why the call is so short, 25 minutes. They are taking their time. They are not in a hurry. I mean, this company was included in the S&P 500 not long ago, but still you don't have a lot of analysts covering TPL, Texas Pacific Land, which is crazy. Like, the lack of information is great. How many people are doing what you are doing right now? Listening to the call.
You saw a pullback on the shallow disposal 7-8 years ago. You saw a pullback more recent in the last 2 to 3 years that has really seen the overall disposal capacity in New Mexico decline. But the deeper disposals are significantly more expensive, and due to various seismic and cost, and really that payback on the deep disposal, when you see a reduction in volume given the capital cost to put one in, you've seen a significant reduction on both sides of the border in deep disposal.
And as my final question for you guys, and just kind of thinking about your 2025 trajectory, referencing your line of sight inventory and recent commentary from industry, how are you thinking about the turn-in line quarterly run rate, if you will, for oil and gas royalties?
Derek, if you look at the current line of sight inventory and you just kind of take your DUCs and your recently completed, 13 and kind of 3, you put those together, you're like 16. I think, the 3 recently completed will, nearly 100% of those, or practically 100% of those, are going to come online during the course of the year. On the DUCs, the timing of those, it's usually 90% or higher that get turned on in the course of the year. And you might even have 5 or 10% of the permits that also kind of make the full cycle trip in less than a year. So, if history is a guide, if people continue activity levels that we've seen historically, that might lead you to believe that somewhere in the 14 to 15 net wells would get turned in line during 2025, all 3 of the completeds and, 11 or 12 of the DUCs and maybe less than 1 net permit or something like that. And that would be very robust. I mean, that would probably exceed past years as far as like quarterly run rate. So the potential is definitely there for a very robust amount of wells coming online. It's really just going to come down to probably oil prices and activity levels. But as far as the inventory available, very, very strong right now.
All right, terrific. Great update. Thanks for taking my questions.
Thanks, Eric.
Thank you. At this time, this does conclude today's teleconference. We thank you for your participation. You may disconnect your lines at this time and have a great day.
And that's it. Only one analyst asking them questions. Maybe, wow. Oh, not a lot of people on the call. Maybe the call was too early. Maybe they did a bundle of all the questions to one guy. I don't think this is the case. That's crazy. Nobody is asking them questions. Nobody read this report. Literally nobody read this report and discussed it. I wanted to know more about the data centers, more acquisitions in the future, how they think about their capital allocation policies in the future. But we have no information in their earnings call. Like, we'll continue to operate. More volume, we are going well, we're going fine. Small bolt-on acquisitions. If the price of commodities is going up, we'll make more money. And we plan to continue to have a lot of cash without any debt. We continue to improve our operations and improve our segments. That's basically it. And do you know something about the Trump administration? Drill, baby, drill, this kind of phenomenon. They said, I don't know. We don't know. So we have no information at all about the call. Well, thank you for listening to the call with me. But we have lost our time, wasted our time here. No basic information, nothing about data centers, about the project. Data centers in Texas are potentially good, but there is a probability that we see no data centers for TPL. There is a probability. It's in the early project. In Q3 2024, the call was listening to the call.
Ladies and gentlemen.
The call was 25 minutes long also. And data centers were mentioned here. They talked a little bit more about data centers. You had a few paragraphs about data centers. And what about the other one? Maybe the call is 25 minutes long.
And welcome to the Texas Pacific.
It's 30 minutes long. And for Q1, let me just...
As a reminder,
maybe this one is 35 minutes long. I think the call are short because there are not many questions. There was only one analyst asking them questions. Well, we don't have a lot of information. For data centers, we don't have... For the moment, we see nothing about data centers in TPL. And that's normal. If you follow my channel, if you follow what Horizon Kinetics has said on this subject, they told you, for TPL, because the land is not contiguous, this is a checkerboard land, you have a little bit of land over there, a little bit of land over there, you can't have a huge data center pipeline project. And this kind of land operations are not the same for LandBridge. For LandBridge, this is another land management company. They have a large amount of land, contiguous land, where you can build data center. And already one data center signed for LandBridge. For TPL, I see no sign of data centers. It's quite possible that they don't implement data centers until late 2025, 2026. We can have a few quarters without any mention of data centers. So be careful if you plan to invest in TPL right now. The valuation is high, and don't forget that this is a simple business, oil and gas, royalty, water, growing at 10-12% per year. So now we have a PE ratio for this stock at above 50-60. Even if it drops to a current PE ratio of 50, the stock is expensive. So we will see. In case you want to get more information about TPL, I recommend you go to Value Investors Club. I'm here to give you value, so let me give you additional value, right? You clicked on this video. you go to TPL, and a few days ago was released this short article. You maybe know how this website works. This article was released on November 2024, but you have to wait a couple of months before it's accessible to the public, because we are not members of VIC. So now, in this week, actually, a few days ago, this article was made available to the public. You can read it. It's pretty interesting. It's a short report on TPL. It's an article against TPL, saying that the valuation is very high, the data center thing is a fantasy and will never happen. You will hear a lot of bear case when the stock is trading high. When the stock is trading high like this, you will have bear arguments. So I read it. I think it's great. It's a great article. Always interesting to read more about the bear case, the negative case for my stocks or the stocks I'm following. So in case you have some time, you can read this article to get more information about TPL. I hope you like this video. I like doing this format of just doing my work and showing you, sharing with you how I work, listening to the calls, analyzing the reports, etc. So if you like this kind of format, you can leave a comment below, leave a like and subscribe if you like this format. So let you know, I'm waiting for your feedback, guys, and I wish you a nice rest of your day. Goodbye. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.